here, and that's why this committee is going to express its opinion to you today. Mr. Chairman, I'd ask unanimous consent for a letter that I've sent to Mr. Gensler to be entered.
Without objection.
Mr. Gensler, you were kind enough, and your staff was kind enough last year to engage me on an issue that I asked for. I asked for us to speak. I asked for us to try and get closer to understanding. You've spoken a couple times today about, in regards to the chairman, but perhaps issues about, well, these would not be appropriate in public forums to talk about. But almost every filing that companies make are public filings. They already are public. It already is known. And once again, I find you trying to hide behind things for either a lack of willingness to be candor about it, or you're trying to obfuscate your oath of office, which was well and faithfully. This committee is not happy with that attitude or performance. I was told by you, after we'd had numerous discussions with your staff, about a company that had a capital formation issue with millions of dollars at risk at the last minute based upon their public filings, that you would not respond at all or even discuss the matter with the company to try and alleviate a problem for the average number of days that it would take your agency to respond. In other words, the agency had to respond. You were simply a placeholder. You have no real responsibility. You have your own views, not the views of the management of the organization responsible. So I would say to you today that there's a corollary. You talked about your father. I'm going to talk about my father. And my father, who served as a federal judge for 14 years, became director of the FBI for President Reagan. He recognized that the agency had a problem that probably emanated from the Department of Justice. I'm not going to blame the FBI. I'm not blaming the Department of Justice. I'm saying the circumstance was there, that they would not give credible information or deal with people who they were indicting and charging. And my father changed that and said, if you are, or if you have reputable counsel that stands at the behest of a court, that a court could punish them for incorrect or unlawful behavior, inappropriate or unethical behavior, if you had a counsel who was of extreme confidence, then the Bureau would deal with you even on the most sensitive issues. I will tell you that one of the clients that I referred to you has extremely important and valuable confidence in their counsel. And you as an agency have chosen to stonewall, obfuscate, and not do your job. And I've sent you a letter, and I'm asking you to respond back to this committee and to me about whether you're going to look at that when confronted by this committee, because I strenuously believe that you should have some authority and responsibility in that effort. Mr. Chairman, I yield back my time.
The gentleman from California, Mr. Sherman, is now recognized for 5 minutes.
Mr. Chairman, Chair Gensler, I am very pleased with your attitude and your performance, but my views are my own. I'd like to speak for the gentleman from Texas, but he hasn't authorized me to do so. I won't. The chair of the committee says that we ought to have absolute clarity in this issue, and I agree with him. And we can achieve that if the chair will work with me on legislation to say that all intangible investment assets, including all crypto, are securities. That way it would be very clear that investors in crypto get the same protection as investors in stock, bonds, and other intangible assets acquired for an investment purpose. The definition of accredited investor that we have now relates to the wealth of the investor or their income, which may have nothing to do with their sophistication and knowledge. And I look forward to working with others on this committee to have a definition of accredited that discards the idea of wealth and looks instead at knowledge, but also specifies that if you're going to participate in that kind of private placement, you don't put more than 5 or 10% of your assets in any one basket. The definition of an accredited investor we have now is based on wealth levels set in the 1980s, which means they're completely out of date and probably shouldn't be used at all. Mr. Chairman, you said to the banking committee back a couple years ago, to the extent there are securities on these trading platforms, under our laws, they have to register with the commission. So assuming that a particular crypto token is a security, if that's true, is an exchange where that security is traded a securities exchange?
Under the laws, if you meet the definition of an exchange and you have securities on that exchange, yes, you have to come in and comply and register and protect the investing public.
Well, I heard you earlier say that no field in finance is so rampant with non-compliance. If there are those who are not complying with our securities laws, please shut them down as quickly as you possibly can. And I point out that the most famous crypto exchange was FTX. It is now, of course, the most infamous exchange. Congress expanded from 500 all the way up to 2,000 the number of entities that can be beneficial owners and still have the company thought of as a private company. I mean, that's a lot, 2,000 owners. But we've got a huge loophole here where you could have dozens or hundreds of beneficial ownership entities counted as only one if they list the stock in street name. Do you have the authority, and will you move toward a definition of 2,000 that reflects 2,000?
I think you raise a good point, and I've asked staff for recommendations for the Commission's consideration, really to ensure that Congress's will about these numbers, the 2,000 number you reference in the Jobs Act, it really means 2,000, and how to look at, as you say, street name ownership that a broker might hold for hundreds of
think you'll
thousands.
find companies calling themselves private that have many, many thousands of beneficial owners, and that's not what the securities law calls for. Companies, when they file their 10Ks every year, they list their risk factors. One risk factor that's increasingly important is the risk of a disruption in the U.S.-China relationship or economic relationship. If investors got explicit information about that, that would protect investors. If companies had to fight for capital by demonstrating their resiliency, their ability to withstand such a breakdown, then our entire country would be more resilient and Taiwan would be more secure. Can you move forward to be more explicit and clear with companies that they need to disclose the risks to the company and hopefully what they're doing to ameliorate that risk of a possible breakdown in the U.S.-China relationship?
Under current rules, companies need to disclose material risk. If they have operations and there's material risk related to any geopolitical area, not just the one you mentioned, they're obliged to disclose that.
The gentleman from Oklahoma, Mr. Lucas, is now recognized for 5 minutes.
Thank you, Mr. Chairman. And Mr. Chairman, it's good to see you again.
It's good to see you. I can call you Mr. Chair as well.
Absolutely. And as I always like to remind my friends here, we spent a great deal of quality time together at your previous posting at the CFTC when I was chairman of the committee. That said, I'd like to begin by focusing on a proposed rule pertaining to security-based swaps. There's a consensus from market participants that the SEC's proposed rule to publicly disseminate large security-based swap positions would deeply harm liquidity, particularly in the credit market. And I'll note, standing up a large position reporting regime for confidential regulatory purposes is sensible. As you know, for example, CFTC has a large position reporting regime for futures. but that information is anonymous and aggregated. In November, I and my Democrat colleagues and Republican colleagues sent a letter from the members of the committee regarding this proposal. We specifically asked that you support an approach that would require confidential reporting, noting the potential harm of putting sensitive position information out on the market. Chairman Gensler, have you carefully considered this bipartisan feedback? And will the SEC amend the proposal to reflect this?
I recall your thoughtful letter and the approach, and we're taking that into consideration. I think the part of the motivation, as I understood it, that Congress put this in the act that you helped write was not only for the official sector to have some information, the confidential information, but also then some of that information to be also in the public domain. And that's what we're sorting through, but your letter is helpful.
I look forward to your response, because I think the issues that have been raised are very legitimate. As chairman, as the chairman also discussed, the volume and breadth of SEC rulemaking is of significant concern to me. The implication of many of the proposed rules are massive and often affect the same or interconnected financial products and market sectors. The adverse consequences in one sector can bleed over into another, causing lasting economic harm. I'd like to reflect on my time as chairman of the Ag Committee during the implementation process of Title VII of Dodd-Frank. The CFTC's rulemaking process seemed to be rushed and chaotic, which led to proposed rules that were poorly vetted. As a result, the CFTC routinely resorted to last-minute staff guidance and no action letters that were needed to modify new rules that simply weren't always workable. This patchwork approach circumvented the standard rulemaking process and lacked many real cost-benefit analysis. At this time, many of the proposed rules were required by Dodd-Frank. They were at that time. The same cannot be said today. Even still, the SEC is following the same path, some would say flawed path. The proposed rules have a major impact on every asset class under the SEC's jurisdiction, with serious consequences for public companies, investors, retirees. I recommend the SEC take great care to analyze and carefully consider the impact of draft rules. This way you can avoid the rush to fix all of the unintended problems that were created. Thought to consider, Mr. Chairman, as we work through this process together.
Yeah, I agree. I think the input from the public, we put these proposals together carefully, but we so benefit from the public comment. We benefit from hearings like this as well, and the letters that you send us to sort through. It generally takes over a year before we finalize something, and we take these meetings with market participants seriously and consider their thoughts.
I would just note, Mr. Chairman, you've issued twice as many rule proposals in your first 2 years as the SEC chairman, 53, as Chairmans Mary Jo White, 23, did, or Jay Clayton, 26, in their first 2 years, while providing 21% less time for public comments. I get the impression from personnel across the SEC that there are concerns about the high volume and the fast pace of this rulemaking. Let's try and get it right, not get it done in a hurry. With that, I yield back, Mr. Chairman.
The gentleman from Massachusetts, Mr. Lynch, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you for your good work, Chairman Gensler. I appreciate the energy and the talents that you've put to work on behalf of investors. My friends on the other side of the aisle seem to be bemoaning a lack of regulatory clarity, and then in the same breath, they criticize the SEC's rulemaking efforts, which arguably would provide that clarity that they desire. Chair Gensler, in your testimony today, you mentioned that there have been over 130 enforcement actions brought by the SEC against crypto firms that have either engaged in marketing securities without providing the necessary disclosures or failed to submit audited financials or investor protections that would allow investors to actually make a meaningful and informed decision regarding the crypto products or the underlying business. Chair Gensler, based on current law, of those 130 cases, those 130 enforcement actions, how many have you won? How many has the SEC prevailed on?
Many of them are settlements, but those that we've taken to court, we've won on the Howey analyses, these token issues, 6 or 8 times. We've won on other matters in front of the courts as well. So we've been quite successful throughout.
Okay. Am I correct in asserting that in each of those cases,
paano hindi ka
each of those
mananalo
cases
you're
went through a
enforcing your
regulatory or
regulation?
legal
Hello?
process and or
Kaya mananalo
maybe
ka
even
lagi.
judicial appeal?
Sino ba lalaban sa'yo?
And that actually there are decisions, written decisions on each of those cases, either by an administrator or by a court of law that do provide explicit guidance based on current law to other crypto and stable coin firms to provide clarity and that actually lay out some rules of the road that should, you would think, guide other crypto firms
Exactly.
in their actions.
You raise a
Exactly.
very good point. Every one of them is a vote of a 5-member commission, sometimes run by Jay Clayton, sometimes I'm honored to chair, but always a 5-member commission and always with a written public document, an order, or a charging document.
And there's also a joint statement on crypto asset risk to the banking organizations. That's a January 3rd, 2023, which lists 8 key risks associated with crypto assets that banks should be aware of. So there's a fair amount of guidance out there and clarity. It's just not the clarity that the crypto industry wants.
Absolutely. We've also been clear and we've been public as a 5-member commission as with regard to the custody of crypto assets, about the exchange definition in crypto assets. We put some of this also out to public comment, but I agree with you. It's not a matter of lack of clarity. I think this is a field that in the main has built up around non-compliance, and that's their business model. And they have chosen, even though it's not the law, they've chosen to be non-compliant and not provide investors with confidence, protections, and it undermines the $100 trillion capital markets. If there's one field of finance and investors get hurt, then it's going to undermine those small businesses and everybody else raising money in the capital markets can get hurt by this field of non-compliance.
That's great. One of the things I worry about in this area is that crypto firms offer an amalgam of services that in the traditional banking system and securities area are ring-fenced. So they do a lot of things like they have exchange function, broker-dealer functions, custodial and clearing functions, and lending functions. And we've seen commingling of investor funds. Can you talk about the risks that arise from that structure?
We separate these everywhere else. The New York Stock Exchange is not running a hedge fund trading against the people trading on that New York Stock Exchange. And here we have a field that commingles this and trades against their customers and doesn't give the proper disclosures. And we've brought a number of cases, one settled, one a litigated matter with this regard.
Thank you. Mr. Chairman, I yield back.
The gentleman from Florida, Mr. Posey, is now recognized for 5 minutes.
Thank you very much, Mr. Chairman. Speaking of crypto, commingling of funds, while we're on that subject.
Dapat
prior to the
magsalita yung
collapse
chairman
of
ulit eh. Grabe yung tanong niya
FTX,
kanina, grabe,
did you
about
have any
Ethereum.
concerns with the company or question if they were breaking any securities laws or harming investors?
I think, if I might, I have had, since I've been in this job, a general concern about the field and as expressed here today about the non-compliance of this commingling of these various functions, and that they should come into compliance by separating exchange from broker-dealer from what you might call a hedge fund function and other functions.
Pero
So,
those
with
are
those
centralized
concerns,
exchanges, hello.
Did you direct your staff
Those
to
are
look into
companies eh.
FTX?
Hindi naman crypto yun.
I want to stay
Crypto is
at a little bit
decentralized.
higher
We're
level, but
talking
I
about
directed the staff
companies
to
na,
look
sorry na.
into the crypto intermediaries and a wide range of crypto intermediaries. Yes, sir.
Okay, so what did they find?
Well, we filed an action late last year, a number of actions, which are public actions with regard to Sam Bankman-Fried and FTX that are on our website. But what we found in those actions, as they show, is we allege a number of violations of the securities laws.
Yeah, when did you think FTX was problematic? At what point?
Well, again, we filed these actions in December, and I think we've filed follow-up actions in January because it takes time to develop an investigative file, and we follow the facts and the law where they come. But I've given speeches and I've been clear with many members of this industry that right now they need to come into compliance. We have one goal, is to bring them into compliance and to stop commingling all these functions, stop using customer funds as if they're their own. It's like somebody who's got their hand in the cash register, as they say, I want to take some money out of the cash register for the weekend, I'll put it back later.
How
And that's
long
just
after-
not proper.
How long after you met with FTX and investigated, and did you notify the public and investors that there was an
Again,
issue?
as we've chatted earlier today, we protect anything we do in our examination function, our investigative function. We protect that information and hold it confidential because it's important for the integrity of any investigation, but also for people's privacy. And often we find that we close investigations without bringing action. So there's a time-tested reason that you, of course, would want us to keep things confidential. So we only make them public when and if we either settle or bring charges.
Sad to hear that. The Inspector General found that your SEC is facing the highest attrition rate in 10 years. You know, how has the attrition rate affected your agency's ability to regulate digital assets?
No, it's a very dedicated workforce. We've moved up to about 6 or 7% attrition. That's consistent with other financial regulators across the U.S. government. I'm really pleased to say that last week the Partnership for Public Service, we went up in the overall rankings. We're now in employee surveys. These are employee surveys done by outsiders. I think we're now third out of 27 mid-sized agencies. But in terms of digital assets, we could certainly use more resources. I mean, it is definitely, there are more things to look at and investigate than we have people on the staff to do.
Thank you. Thank you, Mr. Chairman. I yield back.
The gentleman from Missouri, Mr. Cleaver, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Chairman, thank you for your April letter, which I interpret to be a gentle reminder to Congress that we needed to raise the debt ceiling. And I appreciate the fact that you clearly understand and recognize the importance of this. I mean, we've raised the debt ceiling 78 separate times since 1968, and both parties, 49 times under Republicans and 29 times under Democrats. It is something we have to do. My first question is, do you think that the mere suggestion that we're not going to deal with the debt ceiling create a problem for us economically? I mean, one of your responsibilities is maintain some level of order in the markets. So what do you think, just a mere suggestion, just a mere threat, what does that do?
It puts a dose of uncertainty into markets, but becomes particularly problematic the closer one might get to whatever deadline that is. And that's not our jurisdiction, that's others. But, and then if we were to go over said
Take note nyo sa Bitcoin, guys, ha?
it
Nasa
would
support
really
tayo.
undermine, it would be one heck of a
Take
mess in
note nyo to,
capital
ah.
markets, that's for
Support.
sure. But it would
Support.
undermine the
Type
base
number
of
one
our
kung
capital
nakita, ah.
markets, U.S. Treasuries, or, you know, the risk-free part of our capital markets, that everything else is built on top of that.
I was here in 2011 when there was a stalemate. We're not going to do anything, and so we ended up, of course, averting the cataclysm, but we still did damage to the economy because the gamesmanship caused us not to address this very serious problem. I guess we have failed once, at least, maybe more. You may be to address our obligations. 1812, we didn't have the resources for a period of time. But since then, we've met our obligations, and I'm really maybe obsessed with what could happen if we don't, and you know, it's troublesome to me. I don't think you're probably old enough to remember a movie that came out in 1974 called Blazing Saddles. It's one of my favorite movies. Should have won the Academy Award. But you may remember the scene. Gene Wilder's just brilliant, but Cleavon Little played the role of a guy named Bart. And at one point in the movie, he is surrounded by people who are ready to lynch him. He takes out his gun and puts it to his own head. And he said, "Get back or I'll shoot." You're probably hesitant to want to say this. Isn't that what Congress is doing right now with the debt ceiling?
Well, being old enough to have seen the movie, I think I learned enough to say it's between Congress and other parts of the administration, the Treasury Department, the White House. I can just speak to the capital markets piece. On the capital markets piece, we've already seen some small bits. You know, there's certain money market funds and other funds that are being careful about which short-term Treasury bills they buy. But if we were to get close to that X date, your proverbial visual that you just did from the movie from 1974, it is likely that we would start to see fraying, less liquidity in the Treasury markets, which ultimately means higher cost to the taxpayers coming into that. And then, you know, if we were to go over that default cliff, it would be, of course, unprecedented, but it'd be one heck of a mess in capital markets. It would hurt the equity markets. It would hurt the rest of the fixed income markets. And it would ripple into the banking system as well, not to mention all the money market funds.
Thank you, Mr. Chairman. I yield back, Mr. Chairman.
Well, I like my colleague. I think we need to exchange movie lists. A lot of bipartisanship, that's true. So with that, we'll go to the gentleman from Missouri, Mr. Lukemeyer, for 5 minutes.
Thank you, Mr. Chairman. Welcome, Chair Gensler. We certainly appreciate you being here today. And when I was
Buti pa rito sa
talking to
US,
friends of
ang
mine yesterday
aayos,
about
5
your
minutes.
appearance, I
Samantalang
said,
sa
"Oh,
Pilipinas,
the EPA
5
director."
minutes, pero
And
mag-uusap
we both
20 minutes.
chuckled about that, but it makes the point that it seems as though your agency has taken on a different mission, that you seem to be pushing an ESG agenda, which is, in my mind, something that's not in the best interest or under your purview of the SEC. So I'll let my other colleagues get into that a little bit deeper, but I want to put something on record with regards to that. My first question deals with mortgage insurance-linked notes. According to the National Association of Realtors, the average first-time home buyer's down payment is 6%. In an environment of elevated interest rates and home prices, private mortgage insurance can make the difference between a family becoming homeowners or waiting years on the sidelines to amass a 20% down payment. At the same time, private mortgage insurance protects taxpayers by standing in front of credit losses at the GSEs in the event a borrower defaults on low down payment loans. Like other insurers, private mortgage insurers must manage capital positions and risk exposures on an ongoing basis. Mortgage insurers are in fact encouraged by state regulators and FHFA to manage that risk through purchase of traditional reinsurance and through capital market structures such as mortgage insurance linked notes. However, SEC's recent reproposed conflicts of interest rule may unintentionally restrict the ability of private mortgage insurers to utilize mortgage insurance linked notes as a risk management tool because the rule does not define the term synthetic asset-backed securitization. Chair Gensler, as the SEC continues to work on the conflict of interest rule, will you ensure that the final regulation does not cause unintended harm to the residential mortgage market by limiting the ability of mortgage insurers to utilize critical capital and risk management tools like mortgage insurance linked notes?
This rule proposal is one of those, if I can call it, leftover mandates that Congress had put in place 13 years ago now in Dodd-Frank. So we put out a proposal to do that which Congress said, that if somebody was doing asset securitizations, they couldn't effectively trade against their investor clients, which is something Congress saw happening back in the 2008 crisis. And so we're committed to do that within the law, and obviously to take in the comments that you're talking about and sort through this.
Okay. Obviously,
best
there's
we can.
concerns about that and hope that you'll be able to address those. Okay? Very good. Well, with regards to the banking crisis that we've had recently, I think it's an instructive moment from the standpoint of things that we maybe were not thinking about before. We saw with this crisis where somebody got on social media and within less than 2 days had $42 billion run off the books as a result of a social media tweet and the follow-ups from that. That got me to thinking and concerned, and in fact, this morning, the CEO for Charles Schwab, Paul Bettinger, voiced the same concern that I've been talking about for the last several days, which is about short selling. It would seem to me that if we have a situation where we have a lot of banks that are not very liquid right now, that there's some concerns about, that somebody could play some funny games with our not just the banking industry, but our economy as a whole. It could be somebody trying to make money. It could be a foreign actor who wants to do something different to our economy. So the question becomes, if you want to, so I guess what my question really is 2 parts. Number one, do you have the ability to stop a short sell problem that arises within the banking industry, for instance, based on its threat to the entire industry?
Both buying a security, going long, it's called, and shorting a security are important parts of our capital markets and important parts of in our legal. To go both long and to go short, it's a way to express and help capital markets work. And so we facilitate that. What we guard against is people trading on material non-public information, and we guard against people doing manipulative acts in the market. So it's really...
Well, my question is very simple. Do you have the authority to keep this abuse from happening, this manipulation from happening for the wrong reasons? Understand that it's part of the market structure, it's part of market investing. But if people are doing this to try and cause a run on the banks, to undermine our economy, undermine the industry
they should
for
not
their own profit,
control.
or as a foreign actor to do something,
I'm expecting
you have
a
the
no
ability
answer.
to stop that. That's my question.
No.
We most definitely have the authority and the ability to go after fraud and against manipulation in capital
Okay,
markets.
my question though, do you have the authority to have a across-the-board ban on
Just
short
answer
selling?
it.
So you could stop this
You're
from
not
happening
answering.
by people continue to tweet?
I don't believe that Congress has given us that authority.
Exactly.
Sir. We give
Wala
authority to
kayong
deal
ganon.
with
Just say
individual
no.
acts of manipulation and chasing after fraud.
So much time is expired.
Okay, thank you very much. I'll yield back.
The gentleman from Connecticut, Mr. Himes,
Sagutin
recognized
mo
for
lang
5
no eh.
minutes. Thank you, Mr. Chairman, and welcome, Chairman Gensler. I don't have blazing saddles today, but I've got Lionel Trilling. Lionel Trilling was a American critic, an intellectual who in a book in 1950 called The Liberal Imagination said that American conservatism is not so much about ideas, it is, quote, a series of irritable mental gestures which seek to resemble ideas. That was true in 1950, it's certainly true here today. And to illustrate that, The head-spinning irony of where you're sitting right now is that less than 3 weeks ago, the Federal Reserve, the FDIC, and the Treasury were sitting in precisely those seats in a hearing about the crumbling of Silicon Valley Bank. And to hear the majority at the time, it was all their fault. They had done too little and they'd done it too slowly. Something you might remember as you get accused of doing too much too quickly. I promise you that when something goes wrong under your jurisdiction, you'll be sitting back in that seat having done too little, too slowly. Now, never mind that Silicon Valley had 1 banker on their board of directors and 0 bankers on their risk management committee. Never mind that the vast majority of their deposits were unguaranteed. Never mind any of that stuff. It was their fault. And I promise you, when something goes wrong under your jurisdiction, you will have done too little, too slowly. You've been accused of not being here. The Republicans have been now in the majority for 100 days. You were here on day 100. Did you receive an invitation from the Republican majority prior to the invitation that brought you here today?
We worked with the chair to come when he wanted me to be here.
Have you said no to a majority invitation to testify?
We'll work, and whenever the chair wants me here, I'll be here.
Okay, all right. Having gotten that off my chest, I do have a serious question. I've long been concerned by the fact that an awful lot of our capital markets are migrating to private markets. You mentioned it in your testimony. You point out that the amount of liquidity in the private markets now exceed actually the banking system in size. If you look at public versus private market offerings since 2009, registered offerings are more or less flat since 2010 anyway, and exempt offerings are really skyrocketing. The challenge there, of course, is that individual retail investors, by and large, can't invest in private offerings. I worry that profitability and good deals will migrate to those private offerings that accredited investors and institutional investors, that's a term of art for people with substantial amounts of money, can invest in, and retail investors will be left with an increasingly small set of opportunities to invest in the American capital markets.
That's true.
So with my 2 minutes remaining, Mr. Chair, I think it's fair to consider the possibility that the regulatory structure, which I have long supported around public offerings, creates some arbitrage for issuers versus the exempt market. So I just want to give you 2 minutes to reflect both on the proposals that you've made with respect to market structure, but also overall, big picture, are there things that we can be doing along the lines of the Jobs Act or anything else that would hopefully reduce some of this arbitrage between the public and private equity markets?
Let me start by, I think that the American economy is benefited both by vibrant, robust public markets and private capital markets. My dad never had to tap the private capital markets of like today, but he ran a small business with 30 or 40 employees, and he didn't tap the public markets. I was at Goldman Sachs for many years before it was a public company, and I was a big company that tapped only private markets. So I think both have a role to play. In terms of our regulatory agenda, what we're trying to bring is greater efficiency and competition in the asset management of private capital. This $20, $25 trillion of assets under management by hedge funds and private equity and the like, and through greater transparency of their fees, their performance, and their side letters where they might be.
Comment na kayo kung taga-saan kayo, Miranda.
And this is
Parang
really
ang
going to
dami niyo
help
mga yun,
the retirees in all of your states, because
from
most of your
overseas?
states are invested in private equity and in hedge funds as the limited partners. It helps the state treasurers, it helps the endowments, it helps the people behind that. If we can bring greater competition in a field that probably has just 2%, it would be $500 billion a year in revenues to the asset managers. This is what I meant earlier. It's important that our capital markets work for investors and issuers, not the middle, maybe.
Time's expired. Thank you, Mr. Chair.
We'll now go to the gentleman from Michigan, Mr. Huizinga, for 5 minutes.
Thank you, Mr. Chair, and I'm glad to see you here, Chair Gensler. And I do want to congratulate you on finally appointing a permanent Inspector General yesterday. A little late coming, in my opinion, but in late February, I'm going to jump right in. In late February, Chairman McHenry, Senator Scott, and I sent you a request of documents and information on your climate disclosure rule. The fact is, other than a couple of emails that were private, you have produced only publicly available documents in response to that request. And I'm going to highlight a couple of those. You sent us a copy of the public comment file on the rule. You sent us a copy of the rule itself, twice. You sent a copy of your testimony the last time you appeared before this committee. You sent us a copy of your public calendar. You sent us copies of public speeches, testimony, and press releases from you and your fellow commissioners. You sent us a copy of a public FSOC report from 2021. And the most interesting and frankly dumbest example of this that we received to date is a copy of a letter that myself and Chairman McHenry sent you congratulating you as being confirmed as chair in 2021. I have that one in my file already. So frankly, it's insufficient and frankly unacceptable what has been going on. I think it's an embarrassment to you and to your team that you sent me a copy of the letter I sent you and then tried to call that responsive. That doesn't really make a whole lot of sense. And further, your response letter to the chairman and myself, the SEC staff admitted that the proposed rule, quote, could increase costs, quote, close quote, related to energy prices under certain circumstances, but you provided no analysis, the actual information that we were looking for, not my letter to you congratulating you as becoming chair. We wanted the analysis on how the commission determined that. Did the SEC conduct an analysis of how this new climate disclosure regime could change energy prices before publishing the proposal?
We, under the law, focus on the costs and benefits.
Did you produce an analysis? Did you conduct an analysis?
The analysis that we put out is in the proposal we put out last year about the economics with regard to issuing companies.
You did do an analysis, all right? Because it looks like it may have relied mostly on public comments to form your cost-benefit analysis.
I just want to make sure for the record, we did an analysis with regard to the cost. It's technically the efficiency, competition, and capital formation analysis that we put, and it's out there in the public domain, and we've gotten feedback on that. We're not a climate regulator.
So, well, amen to that.
I mean,
we understand
agree
that.
on that, sir.
So did you rely on any internal economic data or assessment to inform your cost-benefit analysis? In other words, did you, the SEC, perform any of that cost-benefit analysis internally?
So the SEC looked at, I think, over 6,000 public registration.
So that's a yes?
Statements. Yes, there's a lot of analysis, and that is summarized and put out to public comment.
All right, and I would like to see those documents provided immediately. Are you willing to do that then?
I'm a firm believer in congressional oversight. I know that I'm not.
Okay, well, that was previously requested, and you sent me a copy of the letter that I sent to you congratulating you. So sounds like we now have an understanding that you're going to actually send us your analysis.
So I know that this.
Yes or no?
Well, I know that our staffs are working with.
We have a minute. Yes or no?
And I believe in congressional oversight, and I know
okay.
staffs
All right,
are working
moving on.
together.
Moving on. I'm taking that as a no. So the climate disclosure request, you like that. You responded to our FTX request solely with publicly available documents.
Kanina pa yan, di na sagot ng
To
yes
date,
or no.
213 pages of those
Kanina pa.
publicly available documents have produced. And guess
Ang
what?
hirap ng
You
ganitong
didn't give us anything surrounding the charges filed against Sam Bankman-Fried. On April
Ayan na.
12, Chair McHenry and I sent you a follow-up letter, and we're led to believe that the staff recommendation
Yeah, we'll do
memo
refreshers
presented
sa
to the
Taiwan, why
commission for a vote on charges against Sam Bankman-Fried exists. Is that true? Is there a memo from the staff recommending to the commission the charges that Sam Bankman-Fried was ultimately charged with?
Under standard practice, our commission receives action memos from the staff on every.
So it does exist.
We work on.
So it does exist. Okay, well, you haven't sent that to us. Your staff has frankly told us that it exists, yet you have not sent it.
When we conduct an investigation, we are obliged to keep investigative matters confidential.
So don't, hold on a second. Don't hide behind the DOJ, because then it sounds like I need to send letters to the DOJ and not to the SEC about the SEC charges.
Uh-huh.
So we'll be following up with this after this. My time has expired.
Response to our questions would be appropriate. We'll go to Mrs. Beatty of Ohio for 5 minutes.
Thank you, Mr. Chairman. Thank you, Ranking Member. And thank you to our witness today, Mr. Gensler. Thank you for also responding to us and taking the time to talk to me about the SEC and meet with our team and being here today. Kind of staying in this same questioning with the climate rule. As you know, and many may know, I'm a former small business owner myself, so I think I know as well, if not better, than most of the unique challenges that small businesses might have, as well as maybe family farms. With that in mind, I want to ask about the Commission's proposed climate disclosure rule. We've heard many critics, people on the other side of the aisle have framed this rule on its emissions disclosure, especially Scope 3 emissions requirements, as being burdensome for small businesses and family farms. I've been doing a lot of reading, research, articles on this, so I want to give you a minute or so to chat with us about, is this rule that burdensome to small businesses, or are there actually ways that they've been protected?
So our proposal and our authorities are about public companies, and that's what it speaks to, and really it's just about public companies. We do not place through this proposal, and nor do we intend to have any obligations on non-public companies. You know, there's small businesses, there's agriculture interests that you might be referencing. Companies currently are making, hundreds and hundreds of companies are making disclosures about greenhouse gas emissions, and some of those are, as you mentioned, about their supply chain or so-called Scope 3. And even in our proposal, we recognized and we said, the obligation is only on the public company. They can make estimates if there's something that they are talking to their shareholders about. But we got a lot of feedback, we got a lot of comments on this issue, and we're taking that into consideration. And as we do on all our rules, we'll consider making adjustments if appropriate.
Okay, thank you. Let me try to get another question in here. Certainly, as you know, investor protection is a key part of your mission. And I want to take a moment to highlight some of the investors in my home state of Ohio, like teachers and firefighters, police and other public servants, saving for retirement through their state public pension system. These public servants saving for retirement are a part of the constituency the SEC is tasked with protecting through its investor protection mission. Last month, and we've heard, or it's been referenced many times about our SVB hearing, I expressed a concern then about the Ohio State Teachers Retirement System, how it suffered a big loss with some $27 million invested in SVP. What actions has the SEC taken under your leadership to protect these workers, their retirement savings, or what can I go back and tell my constituents?
Well, I think really most of our agenda, whether it's our enforcement that we do, ensuring that people follow the law, or our rulemaking, helps protect those retirees. But I would just even go back to an earlier comment. We're really trying to bring greater competition and efficiency in the private funds area, because those retirees are often invested in those private equity and hedge funds. And if we can help through transparency and still
Tagal ng tanong sa ETHEREUM, tinanong na kanina
lower
eh.
fees to those folks.
Gusto ko maulit.
I have about 35 seconds. Is there anything you'd like to share with us if I yield my last 30 seconds to you?
Well, if I could just note something about you mentioned your hearing about the recent events in the markets, and I would note there were 3 banks that failed in those handful of days, those 4 or 5 days. And 2 of those banks, the first and the third that failed, Silvergate and Signature, were engaged in the crypto business. I mean, some would say they were, crypto banks. And the third, the biggest, Silicon Valley Bank, actually, when it failed, you saw this country's, the world's second leading stable coin, had $3 billion involved there, DPEG. So it's interesting just how this was all had some crypto narrative as well.
And my time is up. Thank you, Mr. Chairman.
The gentlewoman from Missouri, Ms. Wagner, is now recognized for 5 minutes.
Nothing. Thank you, Mr. Chairman. Chair Gensler, you've publicly stated that, and I quote, "Our markets are the finest in the world," and that, quote, "retail investors have greater access to markets than at any time in the past." Yet, despite these statements, which I wholeheartedly agree with, you still released 4 proposals last December: order competition, regulation best X, tick size, rules 605, that completely upend those markets and remake them from top to bottom. There is a strong possibility that these 4 proposals could make equity markets more costly, less efficient, and overall worse for retail investors. Throughout these proposals, the Commission admits over 100 times that it is uncertain of the impacts of the proposal and that it is unable to quantify or, quote, estimate the economic effects of the proposals. This uncertainty means that these proposals will likely make markets worse for retail investors. You may be willing to risk that, but members of Congress who represent these retail investors, as well as American businesses seeking to raise capital in our equity markets, are not, sir. If the SEC's client truly is the American public, as you've said many times before, then I would urge you to reconsider these proposals before putting millions of Americans' hard-earned savings at risk. You said repeatedly, let me change topics here, that the duty of best execution is too important for only FINRA to have a best execution rule, and that the SEC should have one as well. I'd like a yes or no answer here, sir. Are you aware that...
Give me a second, guys. No, I'm going to rewind doon sa part na tinatanong na siya nun share about Ethereum. Pakinggan nyo to. It's a very, very good interview.
Come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. This hearing is entitled Oversight of the Securities and Exchange Commission. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. And I'll now recognize myself for 4 minutes.
You
for
listen to this,
listen
to this.
Chair Gensler, we welcome you before the committee. As you can see, we're under new management and a new Congress, so please get comfortable. We expect to get through a lot today. So let's get started with digital assets. Under your leadership, the Securities and Exchange Commission has brought nearly 50 separate enforcement actions against digital asset firms. And now your agency is requesting an additional $78 million to expand your enforcement agenda. At the same time, you've refused to provide clarity on whether digital assets offered as part of an investment contract are subject to securities laws. And more importantly, how these firms should comply with those laws. You're punishing digital asset firms for allegedly not adhering to the law when they don't know it will apply to them. It's nonsensical. The administration said it, the Fed has said it, and I'll say it again. Congress must provide clear rules of the road for the digital asset ecosystem because the regulators cannot agree. Regulation by enforcement is not sufficient nor sustainable. Your approach is driving innovation overseas and endangering American competitiveness. The ranking member and I have worked for more than a year on this issue, and we'll continue to work this Congress. But let me be clear. Our goal is to make law. We expect you to play a constructive role in that process. Now, next up, we'll discuss your overly aggressive and very expensive rulemaking agenda. In the past 2 years, the Commission has proposed 53 new rules at a breakneck pace. That's twice as many rules as your predecessor, Mary Jo White and Jay Clayton, in the same amount of time. This raises serious concerns that the rulemaking process is being rushed, undermining the quality of our securities laws, and risking negative unintended consequences. These concerns have been echoed by senior personnel at your own agency. And they are similar concerns raised while you were at the CFTC. Time and time again, you've cut the public out of the rulemaking process with unreasonably short comment periods, even for major rules like your disastrous climate disclosure proposal and equity market structure overhaul. You failed to justify these significant rules with thorough evidence, careful studies, and even cost-benefit analysis. I look forward to hearing why the Commission is rushing to make such dramatic changes in our public markets based on paltry economic analysis and limited public input. Finally, it appears you've been so busy weaponizing the Securities Exchange Commission to push your agenda that you've forgotten a key pillar of the Commission's statutory mission, capital formation. Unlike you, this committee is working to strengthen public markets, help small businesses and entrepreneurs, and increase market access for all investors to ensure the long-term growth and prosperity of this country. I'll close with this. Chair Gensler, your responses to congressional inquiries have been unacceptable. You have a constitutional duty to conduct your business in your agency, but we too have a constitutional duty to conduct oversight of your agency. Under our jurisdiction, we intend to do that, and we will continue to do so aggressively. But it is your duty to respond and comply with congressional inquiries. If you continue to thwart this institution by ignoring our requests and providing incomplete responses, we will be left with no choice but to pursue all avenues to compel the information or documents we need and the American people need and deserve to see themselves. So with that, I yield back. The chair now recognizes the ranking member of the committee, the gentlewoman from California, for 4 minutes for the purposes of an opening statement.
Thank you, Mr. Chairman. Good morning and welcome, Chair Gensler. Right now, our financial system is still recovering from the sudden collapse of Silicon Valley Bank and Signature Bank. Our nation's affordable housing crisis is worsening, and we are on the brink of a Republican-imposed debt default that will create unprecedented and untold levels of harm to the United States and global economy. But unfortunately, today's hearing is not focused on addressing any of those looming crises. Instead, we're here this morning because last Congress, Republicans threatened to do a big number on the SEC and Chair Gensler, and today is the start of them making good on that promise. This playbook isn't new. Committee Democrats and the American public have seen it all before. Under the first Consumer Financial Protection Bureau Director, Richard Cordray, Republicans worked around the clock to harass the agency with sham investing worsens. The SEC and Signature Bank threatened confidential platforms with
aggregate regulatory burden on retail investors,
If we don't protect investment and fulfilling the mandate given to you by the 33 and 34 Securities Acts and bringing them up to date for the 21st century. Thank you for getting information that investors who care about the environment will want. Thank you for standing up to the crypto bro billionaires where an area where the multi-billion-dollar frauds are just the beginning of the societal harm. Investor protection is not the antithesis to capital formation, it is the necessary antecedent. If we don't protect investors, capital will go to other markets.
Bill. Rayburn and Brisbane, not the other way around. Investors and
I'll just adjust, guys. Just give me a second.
system of democracy that we have, even things that we're going to go through today in this hearing. But he was a believer that the American system could help him as a small business owner and as an investor, the little bits of money he put to the side. So I hope that both Mr. Sams would think about the SEC's work to ensure that the markets serve investors and issuers alike, but not the other way around. It's not that the investors and issuers serve the markets or the market intermediaries in the middle. I thank you. I yield back my time.
Thank you, Chair Gensler. I'll now recognize myself for 5 minutes. Ether is one of the
Watch this.
most popular digital assets and powers the Ethereum blockchain. Back in 2018, then SEC Corporation Finance Director Bill Hinman stated that he believed Ether was not a security. Last month, CFTC Chair Benham expressed his view that Ether is a commodity.
Exactly.
The State Attorney General of New York asserted in a court filing last month that Ether is a security. Clearly, an asset cannot be both a commodity and a security. Do you agree?
Actually, all securities are commodity under the Commodity and Exchange Act. It's that we are excluded commodities, but I would agree that a security cannot be also an excluded commodity and an included commodity. I'm sorry, Chair, just to talk about the Commodity Exchange Act more precisely.
Okay, so do you recognize, how would you categorize Ether then?
Look, I think that the general sweep of what Congress did, not just in the 30s, but as amended.
I'm asking you,
years,
sitting in your chair now, to make an assessment under the laws as exist. Is Ether a commodity?
Is Ether
or
a
security?
commodity? Answer it.
Without speaking to anyone.
I know you've
okay,
repeatedly
it's
said
a
you're not
matter
going to
of
speak to
facts.
one, except you've spoken to one, Bitcoin. So I'm asking you to speak to a second one, the second largest market cap here.
And speaking to the tokens, there's 10 to 12,000. If there's a group of entrepreneurs in
I'm
the
asking
middle,
about
the
one.
public is anticipating a profit based on the.
I'm asking you a specific question, Chair Gensler. I said this in private. This should be no shock to you. I'm asking this question. Is Ether a commodity or a security?
And again, it depends on the facts and the law. And if there's a group of individuals.
I'm asking you about the
in
facts and the
middle.
law sitting in your seat and the judgment you are making.
Boom.
And so, Mr. Chair, I think you would not want me to prejudge because I'm also.
But you have
aware-
prejudged on this.
Exactly.
You've taken 50 enforcement actions. We're finding out as we go, as you file suit, as people get Wells notices on what is a security in your view, in your agency's view. I'm asking you a very simple question about the second largest digital asset. What is your view?
And my view is if there's a group of individuals in the middle that the public is
All
anticipating.
right, so let me just
profit
ask a
based
second
on those
question then.
efforts.
Do you think it serves the market for an object to be viewed by the commodities regulator as a commodity and the securities regulator to be viewed as a security? Do you think that provides safety and soundness for the product? Do you think it provides consumer protection? Do you think it serves the value of innovation? I think no should be a very simple answer for you here.
I think
That uncertainty is bad, is it not?
And I think that Congress has said that there's one agency, the Securities and Exchange Commission, under this committee.
And you won't answer my question, and you're the head of that agency. So give me a break. Come on.
Come on.
I'm answering it in the generic because you would not want me to speak about any one set of facts and circumstance.
Okay, so, but you've already spoken. Have you said anything about Bitcoin?
My predecessors and the agency itself has spoken to them.
Okay, but you're not willing to do the same about Ether. Okay, so let me just step back. There's a lack of clarity here in the marketplace. Can you at least agree to that?
I think that the clarity is there. The law is clear
All
that
right.
if there's a group
So
of individuals you're
let
relying
me be
on.
explicit about this. The market doesn't see it. Your regulatory actions and the CFTC's regulatory actions say that there's a great deal of uncertainty here. It is the intention of this committee to fix that uncertainty and actually provide a sound legal basis for this. So let me get into your rulemaking process. So you proposed 53 rules in 2 years. Mary Jo White proposed 23. Jay Clayton.
All right, guys. Anyways, let me give a summary, guys. It's already 12 o'clock now. So, thank you for that. Wow, 204 viewers, and thank you guys for watching. So here's my two cents about it, no. So unang-una, yung chairman na si give me a second. Yung chairman ng close ko lang yung aking trading screen. Just give me a second, guys, no? The chairman of the particular commission or group, no? So, siya yung gagawa ng summary of the report, no? So, si Chairman McHenry. So, makikita mo na mukhang merong already na bias, no? Against Gensler. And for me, it speaks volumes of where the politics is in Washington. No, it speaks volumes kasi tandaan nyo, nung January, nagkaroon ng eleksyon. Nanalo ang Republicans, diba? So majority of the parties ngayon are Republicans, which is not the party of Biden. Okay? So it's gonna be really hard. It will take parang needle in a haystack para ma-push kasi he is recommending almost 53 rules, diba? And doon siya kina-question ng karamihan sa mga nasa Congress. And they were saying, I mean, you did more than two chairman of Fed, SEC, in your term at the same time. So, I mean, what gives, diba? So, talagang it's taking a lot of time ka, Miranda, no, to be able to really him to push the envelope to the Congress. So tingin ko kung whether you see it from my lens or your lens, it's going to be a Congress where majority is against the SEC. Diba? And for all intents and purposes, makikita mo naman kanina, especially the committee that's in charge on capital markets, diba? So, makikita mo naman, meron mga kumakampi, may mga epal lang, sorry for the word, no? May mga epal lang dun, pero karamihan, ginigisa siya, no? And not less than the chairman of the committee said, your reply to Congress is unacceptable. There was even one senator who said, na you gave me a copy of our congratulatory letter. What is that, diba? So, for all intents and purposes, I think the pressure is on. And you need to remember, within SEC, kinakalaban din siya nung 4 na sitting commissioners. So, he is not unison. He is not SEC. Nag-iisa lang siya. So, so much pressure is on his shoulders. Diba? Not less than the sitting commissioners, which are, well, he is primus inter pares kasi he is the head of the commission. But magkakapares lang sila. They have all the same voting power. Diba? Yung pang-5 commissioner, yung magdi-divide ng house. Diba? So, for all intents and purpose, what I'm noticing here is that he is pushed to the wall. Congress is against him. People below. Kaya di ba tinanong siya? Kanina tinatanong, sabi ng question kanina, what's happening with your attrition? Attrition means yung revolving door, ilan yung umaalis ng company mo. So at the end of the day, tingin ko, this is positive news and positive development for crypto. Although it's too early to talk about that. Kasi nga, without the Congress really pushing the envelope, Gensler can still continue and for regulation by enforcement. Diba? Kumbaga, they're creating regulations by enforcing. No? Ang sinasabi ng Senate, walang klaro, hindi klarado, ayusin ninyo. Kasi si CFTC sinasabi, si Ethereum ay commodity. Ang sinasabi ng New York State judge is Ethereum is a security. So ano ba talaga? Is it a commodity or a security? And he is being asked a question as a chairman and he cannot give a clear answer. Diba? Saan ka nakakita ng influencer sumisigaw ng 12:00 ng madaling araw? Para napaka-passionate, diba? Napaka-passionate ni Coach. So, yun ang point natin doon. Kaya gusto ko itong panoorin kasi nga, tingin ko, nabubuo ngayon yung optics na mukhang magre-resign to si Gensler. Nako, mukhang magre-resign to si Gensler eh. Pag ito na pressure, tandaan nyo, pag ito na pressure, remember, there was this SEC commissioner that Trump put into the table. I just forget the name. It could be Yellen. But there was this, pero tinanggal nung nagbago ng administration. Tinanggal. Diba? Tinanggal si Yellen eh. Diba? Sorry, Yellen was Fed. I apologize. No, but there's someone, I forget, no? Merong someone yan. So tingin ko no, Miranda, no, na you know, at the end of the day, it's going to help cryptocurrency, no? So lahat na nakapalibot sa kanya, nasa taas, nasa baba, you know, people above him, below him, and beside him, all of them were saying na na parang against dun sa ginagawa ni Gensler, no? None other than the sitting commissioner of SEC, di ba? Against Gensler, no? She was even tweeting. Di ba? And yan, si SEC Commissioner Hester Pierce, talagang very strong dissent. Sabi niya, no, anti-crypto agenda ka. Kaya anong sabi ni Coinbase? Sabi niya, lalayas na lang kami. Alis na lang kami sa US. Sinabi sa headline ni Coinbase, ngayon nasabi ng mga congressmen, hoy, ano ba namang klaseng capital? Diba isipin nila, ano ba klaseng capital to? Anong klaseng capital formation, authority or enforcing body ito? Bakit pinapalayas mo lahat? Parang anong nangyayari, lumalayas na si Coinbase. 'Di ba? Si Bybit nasa Dubai na. Lumalayas na sa US. So isipin naman ng congressman, ang isipin ng congressman, ano bang agenda mo? Ano bang agenda mo, Gensler? 'Di ba? So tingin natin, nabubuo ngayon yung argument na ayaw sa kanya ng Congress at malaking bagay yan. Bakit? Hawak ng Congress ang funds mo. Hawak ng Congress ang budget mo. Although kayang i-veto ng SEC, ng President yung budget, no? Hawak ng Congress yung budget hearings at pwede kang tanggalan ng budget. Kaya malaki ang kapangyarihan ng Congress, no? Anyways, pinakita ko lang ito para malaman ninyo, no, bilang mga kamiranda, na binabantayan ko si SEC. Kasi nga ang dami nilang problema, no? Isa pa sa mga hinaing ko dito, although hindi naman ako Amerikano, no? Kanina tinanong din merong isang senator gustong palabasin, anong ginawa mo nung bumagsak si SVB? Nakita ko, hindi ko kasi alam kung nauunawaan nyo ng mas malalim, no? Pero ako kasi nauunawaan ko. Kaya nakita ko, iniiwasan niya Nung dinidiscuss na si SVB, di ba? Tinanong siya, is there any other things you'd like to talk in the last 30 seconds ng isang senator? Hindi ako naniniwala sa sinasabi niya. Sinasabi niya SVB. I mean, in the first, sabi niya pa may stablecoin issue daw related kay SVB, etc. Makikita mo na, kilala mo na yung laman ng utak niya. Pero ang tanong, ano ang ginawa ng SEC to be able, no? To be SEC and the Fed, by the way, to be able to avoid that particular bank run? Anong ginawa ninyo? Anong ginawang security and risk management ang ginawa ninyo? 'Di ba? Kampante. Kasi sabi ng rule nung yung Dodd-Frank na sinasabi year 2008, nagkaroon ng bank crisis. Ang pinakamalaking development kasi noon, nagkaroon ng prescription, X percentage ng bank fund buffer ang kailangang itaas na in case magkaroon ng bank run, kayang saluhin ng mga bangko yung bank run na yon. Tinaas nila yung capital requirements. Yun ang yung capital ratios. No? Ang problema doon na inamin ni Yellen, it's only applicable when there are capital issues. Diba? When there are capital issues. But when there is a potential liquidity issue, iba pala yun. Yun ang naging question doon. So ang tanong, anong ginawa ninyo? Puro kayo crypto. Diba? O ngayon, ina-undermine nila. There is an ongoing IMF conference. Ina-undermine nila ngayon yung kumaga, pinabaliit nila. Kumbaga tinatakpan, di ba? Kasi pag merong pupu, takpan mo ng ginto yan, pupu pa rin sa loob yun. Di ba? Pupu yan. O, lagyan mo ng ginto, pupu pa din yon. Hindi magiging ginto yung pupu, di ba? Yung ano, yung human faces, di ba? Ang ginagawa nila. Kung may problema, optics perception management ka dyan, you're just covering the problem. Di ba? They just printed money in the Fed. Di ba? Ang tanong is, puro kayo atake kay crypto. Anong ginawa nyo sa mga bangko? Yun lang naman yung point doon. Although, to be honest, may point si Gensler eh. May point din siya. In fairness naman kay Gensler, ang point din naman niya kasi is, sinasabi niya maraming naloko. So ang point ko, totoo, inaagrihan kita maraming naloko. But the question is, yung mga nanloko, hindi yung crypto. Those are companies. Those are centralized exchanges. Diba? That's not the real deal for crypto. Real deal for decentralized are those that are decentralized. Those are the decentralized exchanges. Diba? Sino ba yung mga nanloko? Yung may mga CEO. Sino ba yung mga CEO? Do Kwon. Quote unquote. Diba? I mean, just basic it on the news. SBF pleaded not guilty. Are they decentralized organizations? Hindi. They're centralized. They are companies with CEOs. So, mga point ko doon, may point si Gensler, sabihin mo na. But then again, it's a generalization sweep. Diba? You're generalizing everything agad. Diba? Ngayon, narinig yung sinabi ng chairman. Diba? It's unacceptable. Your responses to the Congress is unacceptable. Diba? Meron tayong kakampi sa Congress. Mas lalakas ang loob ng Coinbase, ng mga enthusiasts ng crypto. Kasi they found an ally in the Congress and that means something. That means something. Anyways, matulog na tayo, 12 na pala. Diba? I hope na magkaroon kayo ng konting insight. How will it affect cryptocurrency? Pag nag-resign yan si Gensler, bullish ang XRP, sinasabi ko sa inyo. Diba? Okay, maraming salamat kay Miranda. Thanks for all that watch our show for tonight. And again, thank you to everyone that watched. And of course, don't forget to click on subscribe to our channel. We're already hitting almost 100,000 subscribers kay Miranda. We're already 98,220. We're needing 1,700 more for us to reach 100,000. Maraming salamat kay Miranda and I love you 3,000. Okay? I'll explain this more tomorrow. Alright, bye-bye guys and good night. Mumulan na mata ko. Thank you. Bye-bye. Good night.